whatever candidate wins, we're in for 4 more years of reckless fiscal policy. The history is that Bitcoin really hits its stride at that point. So we're buyers here. We think it recovers.
Bitcoin's price will fly when you least expect it. In this video, I'm going to share with you what I'm buying besides Bitcoin. First, Matthew Siegel. This is VanEck's head of digital asset research. He just revealed the real reason why Bitcoin is down in the first place and why Bitcoin's price might be making new all-time highs before the November election. He says VanEck is a buyer here. Let the host set up the question, gold is doing well, Bitcoin is not, and listen to VanEck's answer.
We've seen gold make new incremental highs while the dollar's been making, relative lows over the last few months. But one thing that's not participating in this move is Bitcoin right now. So, it's had a series of lower highs, a series of lower lows. How do you explain that disconnect between what gold's doing right now and the way that Bitcoin's been acting over the last couple of months?
Yeah, so a few factors are at play. One is the unwind of various carry trades and growth, which has been struggling a little bit. And when you look at Bitcoin's correlation with the NASDAQ, it's at a 2-year high. It's well below the highs that we had in kind of late 2022, but it's a 2-year high. The second reason is there are forced sellers in the market. The German government has sold all of its Bitcoin, $2 billion worth. The U.S. government is selling Silk Road-related coins. There are 2 major bankruptcies where creditors have just been paid out. That's Mt. Gox and Genesis. So with all this forced selling behind us, and this is a typical seasonal pattern where Bitcoin tends to struggle in the kind of 1 to 3 months after the halving, which was in April, and right pre-election, as the market comes to grips with whatever candidate wins, we're in for 4 more years of reckless fiscal policy. The history is that Bitcoin really hits its stride at that point. So we're buyers here. We think it recovers.
By the way, speaking of the election, we have crypto news from both the Kamala campaign and the Trump campaign. Kamala seems to be dipping her toes into the water more towards crypto. Trump seems to be diving headfirst. Listen to these 2 respective pieces of crypto news about each presidential candidate.
As Vice President Kamala Harris gears up to take the stage tonight at the DNC and accept her party's nomination for president, an aide for her campaign reportedly says that she supports policies to expand crypto innovation. According to Bloomberg, Brian Nelson, a senior policy advisor for the campaign, said Harris will, quote, support policies that ensure that emerging technologies and that sort of industry can continue to grow. Now, those comments were reportedly made when he was asked about her crypto stance during a Bloomberg roundtable at the Democratic National Convention. There have been rumblings that Vice President Harris would take a different stance on crypto than President Biden. Democratic Congressman Ro Khanna told us at Bitcoin 2024 in Nashville that he's in touch with the campaign and hoping to shape their thinking around the industry. We reached out to the campaign to confirm this reporting and what specifically Harris might do for the crypto industry, but haven't heard back yet. Now, we should mention that Trump has positioned himself as increasingly crypto-friendly, and just this morning, the former president and Republican nominee promoted a soon-to-launch crypto platform called the Defiant Ones, spelled with DeFi, to be clear.
And actually, the Trump DeFi business has been something his sons have been talking about for quite a while. I wonder what this is going to be.
What we're talking about is sort of a larger type of platform. Not going to be sort of very different. It's not like it's not a meme coin. That's not what we're going to be talking about. But we got a long time before we could do it. I think what we want to do is sort of take on a lot of the banking world. I think there's been a lot of inequality in that. Only certain people can get financing. Only certain people can do these sorts of things. So this notion of decentralized finance is obviously sort of, very appealing to guys like me who've been debanked or haven't been able to get insurance or whatnot, can't get mortgages because, they don't check certain boxes, but others can.
So, are you buying Bitcoin right now? I'm buying Bitcoin right now. What else are you buying? For me, I'll tell you something I think might be popping off soon. This might be a buying opportunity. I'm talking about Bitcoin miners, Marathon, Mara, US Bitcoin miners. See, Bitcoin miners have been underperforming recently for no good reason, but they're just about to start powering AI in a big way. Most people don't realize this. Bitcoin miners will be powering AI GPUs realize that this is going on behind the scenes right now.
Big Bitcoin miners like Marathon Digital and Riot Platforms lagging far behind the underlying cryptocurrency itself this year, as you can see. But a new report suggests these businesses could be in store for a huge boost thanks to, of all things, well, what else these days? Artificial intelligence. So here to explain is Matthew Siegel, VanEck's head of digital assets research. This is an interesting development here because usually we talk about underlyings and the miners and things and how these things are supposed to be more high beta, bigger returns. What gives between that relationship with Bitcoin, the underlying, versus the miners?
Yeah, there's been a huge divergence year to date. Bitcoin's now up, say, 35%. These Bitcoin miners are essentially flat. So typically they are the higher beta plays on Bitcoin. And in the latest downdraft, they sold off quite a bit. And we think the market's missing a pretty strong underlying fundamentals.
Why? Why have they been selling off?
Just lack of interest, high beta, the unwind of the carry trade, like nothing specific that has to do with the Bitcoin miners that we can see. And what we do see is that week after week, these companies keep announcing new deals with AI companies, hyperscalers. We've seen at least 4 Bitcoin miners announce close to $1 billion revenue deals to transfer their energy to power AI, right? So we know that GPUs take about twice the power as CPUs, and we know that it takes about 4 years right now to connect to the grid in many locations. These miners have grid connections, and with a little bit of CapEx in some of these locations, they can repurpose these facilities in less than 1 year. The time value of that money, bringing that capacity on 3 years earlier, is huge. And these are typically companies with, I have to say it, bad balance sheets, either lots of debt and they all went bankrupt last cycle, or just continually issuing equity at the market. What these AI bids are doing is lowering the cost of capital and providing a more sustainable financing stream for these companies. So on our numbers, if they were to repurpose just 20% of their electrical capacity, we think the stocks can double with no change in the Bitcoin mining profits. So the numbers look very compelling.
So can you connect the dots for us right now? Given everything you've said, the AI trade on this particular move is linked to the power usage and the conversion factor and how to actually make that work. I would argue if you look at a stock like NextEra Energy on the utility side, that has been a derivative AI play as well on this. How do you connect those dots simply about the AI trade versus the Bitcoin miners?
The data center companies are trading at north of 30 times, $30 million per megawatt of electrical capacity that they control, $30 million. The Bitcoin miners are trading at $3 million, right? So now it's not a complete one-for-one transition. They need to find customers. They need to buy the GPUs or have someone else buy the GPUs and install them. But there is an enormous arbitrage. And the companies that have been most aggressive on this year to date, Core Scientific, TeraWulf, Iris Energy, those are the stocks that have outperformed. We just had another one after the bell at 4 p.m. today, BTBT, $700 million AI deal. Our hunch is that as more of these Bitcoin miners make these announcements, those will be the stocks that outperform because it brings their cost of capital down.
And then speaking about what's happening behind the scenes, do you realize how much interest we're seeing in these ETFs, both Bitcoin and Ethereum? Despite the down market, these ETFs are game changers. Vance Spencer, the co-founder of Framework Ventures, breaks it down here.
And you mentioned those spot Bitcoin and Ether ETFs that were recently approved and launched just this calendar year. And that impacts your business. You have, what, $1.5 billion worth of spot crypto exposure? Talk to me more about how those ETF flows have rippled into your company.
I mean, it is remarkable for both ETH and Bitcoin that they've become so large without access to any institutional capital. That's literally the reverse of what usually happens. And, Bitcoin's $1 trillion, ETH is 300 billion. That's all retail. And so what has happened now is the spigot for traditional finance inflows has opened. What's happened? The Bitcoin ETF has been one of the best ETF launches of all time. It's got about half the AUM of the gold ETF. The ETH ETF has followed hot on its heels, and it's getting, on some days this week, more flows than the Bitcoin ETF. And so the market is bifurcated into ETH and Bitcoin. They're getting all the TradFi inflows, and then the rest of the market are competing for these retail inflows that are still in crypto, and those are huge flows. It just gives you an idea of both how large the TradFi inflows are, but also how big the crypto endogenous market is. And it's a global market. It's accessible by far more people than have access to the stock market. And that's just a bullish tailwind for the whole industry.
I'd be remiss not to ask you before you leave about all-time highs, price moves. Are you seeing Bitcoin perhaps surpassing that high that we saw it reach above 73,000 in March? Or where do you see prices heading for the two top crypto coins before the end of the year?
Before the end of the year, it's hard to know, but Bitcoin is worth 5% of what gold is worth, and it's more popular with young people. It's more popular with people overseas, and the ETF has half the AUM of the gold ETF. And so, should it be worth 5%? Probably not. It probably should be worth 20 or 30%, but that's still multiples from here. And I think ETH and Bitcoin are just assets that appeal to people who are emerging investors in the stock market, and it's going to look a lot different than what the older generations, the boomers, want to invest in. And that's going to be a trend that lasts for decades. I think more and more people are going to have a 50-50 Bitcoin and ETH allocation going forward.
Look, guys, the market is not that exciting right now, but this is exactly the time you want to double down on your education, take out any positions you've been wanting to take out. If you believe that the future of this space is going up, if it's going in that direction, why wouldn't you take this as a buying opportunity? That's what I'm doing. Of course, not financial advice. You do you. My name is Aaron, Altcoin Daily. Subscribe to the channel, like the video. See you tomorrow, my friend.